All right, shall we start? So good afternoon, everyone. We now have 1 hour to discuss a very sexy topic, which is how to write a pitch deck that secures private investments. And what I'm going to do is to present around 20-25 minutes, and afterwards you can take the floor to ask any questions, or you can share your screen and present your own deck. So if you want to present your own deck, you can do it in only 3 minutes. And afterwards, you'll get my feedback and the feedback of other participants. So if you want to benefit from this opportunity, please come forward and let us know once I finish my presentation. But now let's start by introducing myself. So my name is Marco Torregrossa. I'm CEO of Euro Freelancers, a fundraising marketplace and investment firm into technologies enabling network effects. So I work for the last 10 plus years with companies, big and small, in particularly platform companies and digital marketplaces, helping them to raise growth capital and internationalize fast. On the other hand, I'm a lawyer by training, and my background is actually in public affairs, as I've led governmental relations for platform companies like Airbnb, Tinder, Netflix, and Etsy, both in Brussels and Washington, DC. So let's begin with today's topic, which is a pitch deck that wins investment. So how to make that happen? Well, first, let's talk about what the aim is of a pitch deck. So the aim is to ask for something. So you always pitch to ask, and usually you ask for a meeting with investors, and you ask to raise the capital you need faster. So the main purpose of a deck is really not to answer all possible questions, nor to close an immediate investment. It's really to open investors' mind to your vision and get them excited to know more. So the story you craft in your deck gets them excited and engaged to start then filling the blanks for themselves. It's all about storytelling. It is a marketing tool that gets your phone call. That's what it is. So compelling decks should be able to stand alone without your presentation, are very concise, they tell a story, they are visual, and they are around 10 to 13 slides. So keep in mind that on average, an investor spends around 30 seconds on your deck, right? So, and it's usually, these decks are usually evaluated by junior analysts who see hundreds of decks per day. And their job is to raise some red flags if something is unclear. So you don't want to give them that chance. So not to do that, you should not include long tests of explanation. Visual elements are usually always better than text, since it lets your message come across faster and more efficiently. Now, these are the sections that every deck should have. Okay, so each section is usually one slide, and then they don't necessarily have to go in this order, so you can mix things up. But let me now walk you through each of these sections. So we start with the entry slide, which is the first thing that investors see when they open your deck. So the goal here is to add a one-liner that helps investors understand what you're doing and answers the first questions they have in their heads. For example, is this business within their scope? Does it fulfill their investment thesis? And so on and so forth. So the one-liner explains really which market you operate in and how you disrupt that market. So very hyped words like AI, deep tech, IoT, etc. are very, very welcome here. For example, making the healthcare sector efficient with technology, or replacing real estate with algorithms, or equipping HR managers with smart AI, and so on and so forth. So let me show you an example of something that I have prepared for one of my customers, and I think this is a really, really good example of an entry slide, and and the one-liner. So take a look at the one-liner, a giant tablet and healthcare platform for an aging population. So why this is great? Because you already show the sector, so it's healthcare, the sector you're operating with. You already show who the customer is of your product, so the aging population. And of course, you are showing what your solution is, what your product is. So this giant tablet. If you look at the picture on the left, it already tells you. It already tells the whole story. So you see the healthcare professional. They are on top. So the sector. You can see the elderly person there. So you can see the customer, and they are touching the product. You know, so the product is live. The product is visible. The product is ready to be sold. That's what it means, really. On the bottom, you see one sentence which is specifically targeted to investors. So you say that it's a seed round. So that typically means that you haven't raised before. The product is ready to be commercialized, so it's ready to go to market. You're seeking 1 million euro and you're giving out 10% return of investment in equity, and the website. Also, the logo is really prominent. So all in all, the investor, it's only the first slide, but the investor has all the details they need to evaluate your opportunity. And again, you're just at the first slide. So this is a great example. Now, it's very, very common to break the ice with investors and start with one slide that we call the story, okay? So it's the story of the founder, usually his vision or her vision, the purpose behind setting up the company. So you put his or her picture. It's something really emotional, intriguing, something that gets investors willing to know more. And it's also a chance to explain what you do in a sort of a short elevator pitch format. Let me give you one example. It's the example of that company that I just showed you one slide before. So Yeti Tablet. These are the founders. It's a couple. They are married, and their children are autistic. So the guy used to work with touchscreen, and he decided to come up with this very big tablet. And after doing so, he realized that his children were more able to interact with the world. So you see, the message they're giving to investors here is that they are doing this as a mission in life. They do this for their children. So you see how powerful this message is, this story is, that gets investors already hooked up to the company. Now let's talk about the team. I mean, starting the deck with a team is a very brave move, and one that I would advise founders to do, because many investors claim that they invest in teams rather than in companies. And at the start of any company's journey, your value proposition revolves entirely around the co-founders and your early employees. So until you build a very strong track record of positive financial results, you and your team are in fact the company's greatest asset. So let's take a look at one example of a good team. So the most common error by founders for their team slide is really not bragging enough. Investors may not have any clue who you are, so you need to tell them. A great team is a mix of technical and commercial expertise. So what you should do, you should not put the names and the picture of everyone in your team. An investor has no idea if your team is good or bad because of your name and picture. So you have to add a little bit more detail. For every person, you should add, of course, the picture, the role, so something recognizable like CEO, CTO, CMO, and those kind of things. A little bit of the cap table. I think it's a good idea to show the percentage of ownership of the company. So not that one person owns more than 90%, because that's a red flag as well. And then you describe very, very briefly in just one sentence any experience and the achievements of each team member. And then you put some logos underneath. Logos could be a previous company. If you have had a successful exit, then you put the logo of that company. If you work for a very well-known big company or a blue chip company, you should put that. Anything that investors understand and recognize it's a good idea of doing. So you see here, all members in this founding team have impressive experience and background in relevant business areas. And this also provides potential investors with confidence that the team will be able to execute properly their objective. You can also add board members, existing investors, anything that could add credibility and reference. So now we want to talk about the problem. So after explaining the skills of the team and building confidence with the reader, now you need to address the problem. And you do that before explaining what your product does. So you in this slide, you sort of set the scene and explain why there's a need for your product. Why should the investor care about your product? So this slide is specifically important if you're solving a problem that might not be well known to the investor. So think about the profile of the typical investors you meet. How familiar is he or she with the problem? So the best is you have two options, really. One option is you can refer to a global problem that your product will fix, because investors like to solve this problem, big problem for humanity. Or otherwise, the second option is that you describe the pain that your customers experience if they don't have your product. So it's sort of a different approach here. So anyhow, you always want to use data to make the pain you explain irrefutable. And the data you share can even come from market report, interviews, surveys you've done with potential customers, etc. But please don't forget to link or explain how you discovered these findings. Now, let me give you two examples of a problem, okay? How they've been done. So this is a startup that wants to make online doctors, really. So what they claim is that 25% of working hours in healthcare are spent on admin. And only in France, this costs taxpayer 5 billion per year. Then there is a small chart on the right that shows what they just said. And at the bottom, they put the source, which comes from some surveys. That's it. The second example is a hospitality company and a hospitality startup which claimed that staff turnover is the #1 problem set by 68% of managers. There is no tool to increase efficiency, and this is costing 12,000 euros for the average hospitality company. And again, you have the source from surveys where they found where to back up this argument. So you see, both of these two approaches give a sense of slowness or low efficiency or an old-fashioned in two industries that are very much ripe for disruption. Now let's talk. You now should talk about your product. Okay, so when you present your product, you want to give the investor the feeling that it's live, it's currently in use. That's why it's really good idea to use screenshots of your product. So you need to make the explanation of this product extremely straightforward in this phase, so that investors can feel like they get it. Okay, so your product is probably more complicated and has lots of fancy features, but it's not the right place to explain those here. So when you explain your product, the rule is very simple. Show is always better than tell. So you need to use pictures, arrows, symbols to your advantage. And also you want to focus more on what your solution does versus how you do it. So that means that basically you want to talk about the benefits, not just features, okay? And you don't go too deep on the technical details unless the investor shows a real interest or an ask. So let me give you again two examples of how to show a solution. Again, here we have this app for online doctors, 3 steps for doctors to work from home: create a profile, receive booking, meet patients. You see the value proposition regarding process optimization and the friction removal here appears really, really obvious to the reader. Another way to show all the features of your product together with screenshots and how it shows in different devices. So they say that today you just go and visit the doctor, but tomorrow what we want to do is to have visits by video, invoicing and payments, automatic follow-up, and meeting between professionals. Now, after the investor understands what your startup does, now it's time to share some proof that you are successful in doing this. Also because you have made presumably some very bold statements in the previous slides, and now you must substantiate them. Okay, so you need to prove that your solution is in high demand and you have validated in advance. Of course, if you haven't yet launched, you need to show that you will be successful as soon as you get the product out there in the market. So the best here is that if you can put a growth chart, so a chart that is pointing upwards to the right. And let me show you 3 examples to do that. So this is a chart, there's a growth chart pointing upright that shows the number of bookings you've had for your startup. Another example is to show the growth in monthly recurring revenue with logos of all the customers you have acquired along the months. Or another example is the number of active users you have had along the months. Now, if your line is not as straight as in this 3 example, it's okay. So it's not necessary when you're raising a seed round. However, if you want to show a growth potential per month, that typically needs to be 10% or more on average. Now, if you don't have any metrics in your company that you're growing 10% or more month over month, you can look at other metrics that are impressive. For example, anything else that shows that people have started using your product, that they love it and they keep using it, etc. And if you don't have users or booking or revenues, you of course need to show traction and your potential in some other ways. So for example, you can brag about any waiting list or quote from some interviews. Now let's take a look at the market. You need to analyze and estimate your market potential. And there is a framework that practically all private equity and VC investors use, and you should apply here as well. It's called the TAM, the sum, and the sum. You can see them here on the left chart. This is an onion chart. So the TAM is the total addressable market, and this is the market, the wider market you're operating within. So for example, that could be the retail market, the healthcare market, the hospitality market. You want it to be worth at least 1 billion euros. So it should be something really, really big. The second is the sum, so it's the serviceable addressable market. So you find this by cutting out a segment of your market. For example, the retail market becomes the e-commerce market, for example. And then last, the smaller bubble, you have the sum, which is the serviceable obtainable market. So you basically do a second segmentation so that you have the estimate of the current market that you will focus first. For example, the global e-commerce market becomes the European e-commerce market. Now,
Marco,
the sum.
Can I ask you a question?
Yeah, you can.
About the sum, I didn't understand what the abbreviation was for.
Sorry, can you ask again? The sum.
Yes,
is serviceable addressable market.
And can you please repeat again the explanation of this?
Sure. So the TAM is the total addressable market. It's basically the wider market you're operating with, the whole. Yeah. Mm-hmm. The sum is the smaller, is smaller. So you just find it out by cutting a segment of your bigger market. And the sum, which is really the most important one, is the sort of second segmentation from the second bubble. So you estimate your lowest hanging fruit, your niche. Okay. So essentially, you're showing investors that you're taking a bottom-up approach here.
Okay.
And either you can present the TAM, the sum, and the sum in value, so in euros, or you can put the number of transactions or the number of users. It's up to you. It's a bonus point if the market is also growing. In fact, as you see on the right side, I have put percentage of growth in each of these markets just to show investors that they will have a better return of investment. So you see, the reader here can easily understand that the market opportunity is huge, not only globally, but also the micro level, where each transaction is presumably worth a few hundreds of thousands of euros, and there are presumably millions of transactions happening every year. Now, in this slide, you explain how you earn money. Okay, and it's great if you do not only explain the revenue part, but also explain how the business model comes together with your market estimation as seen in the previous slide. So if you're not yet sure how you will monetize, you can either list your different ideas for monetization or show the first business model you were thinking of implementing. It's important to start with one business model, your lowest hanging fruit, your cash cow, and then combine a different business model only as you scale, so in the future. So please note, it's important also to arrive at to have a target which usually should be around 100 million or more potential revenue. Why? Because if you, as a startup, have 100 million as revenue, you are valued at 1 billion. In other words, you are a unicorn. So let me take you through two examples of a potential business model. Okay, so now here we go back to our example of this app for online doctors. So they have two plans, two packages really. So the first one is 990 euros per year, which they will sell to individual surgeon. And then the second package, which is 490 per year, which they will sell to individual surgeon in hospitals. Okay, so the sum of all of these two packages goes to 100 million yearly revenue. And pay attention, it's also, this example is also a very elegant way to show who the customers are. Okay, so you can see the individual doctors, the specialist surgeon, because investors like to know who's buying your product and why. The next example is our hospitality startup. This example is very much taken from Airbnb, as you can notice. So let's take a look at it. There are 10.6 million trips per year, people traveling and staying in some apartments. The average stay is 3 nights, 70 euros per 3 nights. And this company takes a 10% commission fee, which is 20 euros. So 20 euros multiplied by 10 million, you go to 200 million per year. You see, very, very simple calculation, very simple simulation. That's what you should do when you describe your business model. Now, let's talk about something really important, the competitive advantage. Now, when you send your deck to investors, they are basically going to do two things. So the first thing, they're going to check within their portfolio. If they have already supported a similar startup than yours, then it's a no-go for you. You have no chance. The second thing they're doing is maybe they have not supported a similar startup, but they're going to look inside their own country to see if there's a potentially similar company than yours. Okay, so now you need to make the life of investors easy, and you have to show that you have mapped the landscape, who your competitors are, and that you have also expressed your competitive advantage, which is your secret sauce. So it's really what sets you apart from competitors, what makes you different. So the way I like to do this is to show this a table like this. So you go on the top, you see yourself compared to several competitors, small startups like you in various countries that you have to describe. Okay, then on the left side of the column, you see a number of features that you have to list. And the idea, this is no brainer, is that at the end of this exercise, you have to show that you tick all the boxes in green with all the features, whereas your competitors, maybe they tick some of the boxes, but some of the other boxes, they have some shortcomings, so you are better. And then in the part below, I don't know if you can see my cursor, but I'm pointing now below just to show that this annual revenue, total funding, employees, customers, and target market. Sometimes these are difficult things to find. If you have a subscription to PitchBook, Crunchbase, Deal Room, it becomes easier. But basically, you compare yourself again against others. And you will see that the investors will see again that you have a potential to scale. For example, many of the companies that I'm helping out, they are a little bit shy. They don't feel like putting this annual revenue, total funding, because they think it's too small compared to the other competing startups. But that's really wrong, because what you should do here is really to show the potential that you have to become one day as big as the others, or maybe these other companies can buy you out. So it's already a potential exit strategy. So don't hesitate to put low figures when it comes to your, for example, revenue or funding, etc., etc. Now, oops, let's continue. Now we talk about finances. Now, I understand perhaps many of you here are successful entrepreneurs, so I'm not going to tell you how to write a balance sheet, but at least I want to show you how to build a simplified balance sheet, or collapsed income statement, or simplified income statement, you want to call it whatever. It's over here. It's a table that shows the most important things are the revenue, the cost, and the EBIT. So these three things, they have to appear in a way or another. There are many other things that you can add on the left column. For example, your customer acquisition cost, your number of customers, the transaction fees you are charging if you're using a marketplace model, the number of employees you have. You can add whatever you want, but please do not forget revenues, cost, and margins. And when it comes to revenues and also the cost, in fact, they should be growing. Okay, they grow year by year. So here the investors want to see that your business model is scalable, and that there is going to be a return of investment for them. Now, when it comes to the revenue, it's also a good idea. Something I advise is to break them down into revenue generated by each of the business model that you have described earlier in the business model slide. I think all in all, investors want to know that you understand how much cash is required to break even, and that is a good business that they will be able to make money through their investment. Now look at the years on top. That's also important. You start with the last fiscal year. So in this case, it's 2020. Because again, investors want to see your traction, if you have had a track record of sales, if you have a validated business model, that's what it says, your last fiscal year, and then you have a five-year projection. Now, when I said that the revenues and costs should always grow, which is exemplified by the pluses I put there, when it comes to the EBIT, which is your margin, they also need to grow, but they can grow slower. So investors understand that you can start with without making any profit, but then slowly you will start making having more revenues than cost, really. So this is the finance. Now we go to the call for action, or the ask. So now that all aspects of the business model have been addressed, now the deck gets to the most important part for investors, so the ask, and how the founders will use the money. Okay, so in this slide, you tell investors how much you want to raise, and briefly what you want to achieve with this, and their return of investment. This also allows them to see if the investment you're seeking is within their scope. So now at this stage of the process, you don't need to explain too many details. When you meet, you will talk in greater detail about how you will deploy the capital and reach the goal. So remember, this is just a teaser, and it's only to make them interested in talking to you. So let's take a look at this. In here, we say that we are looking to raise 1 million euro. And the main target is to reach 5,000 customer physicians in Germany, France, and Italy. So that summarizes well what is your target, what is your financial request, and very simply what you're going to do with it. On the bottom, we talk very briefly about the exit strategy. So in this case, and the exit strategy relates very much to the valuation of a company. So in this case, the company is valued at 10 million pre-money valuation. And if you have a valuation of 10 million and you're seeking 1 million, it means that you're offering a 10% return of investment to investors from the first round of investment, which is presumably this one that you're trying to raise. And you also list what are the main avenues through which you will have an exit. So, for example, M&A, which is mergers and acquisition. In other words, a bigger company buys you out, or an IPO. So you become a public company and you start selling shares. Now, immediately after the ask, you want to talk about the split of proceeds. So you talk about what you're going to do exactly with the money that you ask from investors. So this is an example that I borrowed from one startup I've been working with. And you see, they say that they have already raised almost 500,000 via public grants and private capital. The founders already invested some cash into the company to finalize the MVP. And now they're looking for 750K to accelerate the company in certain areas, mostly to commercialize their main product, the MVP. So what's important here, I just point your attention to business development. That it should usually be the area where you dedicate most of the money. If you are seeking growth capital, equity capital, investors are having the expectation that your product is ready to be sold. So you don't have to improve it that much. It just needs to be uptaken to the market and commercialized, and perhaps you conquer new markets, or you internationalize, you go abroad, etc. So that's why business development takes the largest piece of the pie, immediately followed by marketing, which is often goes hand in hand with business development. And then you dedicate less capital in product development, which I call R&D, and also on operations. Now, these companies specifically has said they want to use 10% of investors' money in protecting their IPR. This is a really bold and smart move, because many investors are they rightly so emphasize that they are buying into your IPR, many they say. So it's important that you put some rules and you explain how you are trying to make your innovation harder to copy, for example, by filing patents or other ways to protect your intellectual property.
Marco, sorry, what does IPR stand for?
Intellectual property rights.
Okay, thank you.
Yeah. Okay, then we go to the end slide. The end slide is basically it's basically something that you have to close your deck with. So you see the name, the address, and everything to reach the founder and the CEO. So very quickly, some takeaways. Mom test, make it simple. If you don't make it simple, if your mom does not understand, probably investors won't either. Many of them are generalists. Invest into some resources to make a strategy for fundraising. It's a long shot. It takes 6 to 9 months before getting any feedback from investors. Let a professional help you in case. Make sure that your message does not change, so don't make it vague or open to interpretation. It has to be very firm. Then you should tailor your deck, of course, to your audience you're pitching to. You have to know it by heart. And please don't read your slide. Keep eye contacts with the audience. Don't look at the floor. Speak on the microphone. All these things. Do not apologize. Say a very firm thank you in the end, and those kind of things. And the last advice is try to go to investors by shared connection. Now, I wanted to show you a video, but I think we don't have so much time any longer. So perhaps this will be included in the slides that will be available later. So I just want to thank you for listening, and feel free to get in touch with me should you wish me to take a look at your own pitch deck. And remember, as an entrepreneur, storytelling is one of the most important skills you need to master. It's really your ability to deliver a compelling story on a pitch deck. It's about how and what you do that will persuade investors to finance you. So until you accumulate a few years of positive financial track record, it's really you, your team, your story, the company's greatest assets. So good luck to you all. And now you can take the floor, you can ask questions, or you can share your screen and present your own deck. If you choose to present, we only have 20 minutes, so I would like to ask you to keep it very, very short, a maximum 3 minutes per participant. And afterwards, you get my feedback and the feedback of the others. So who wants to start? Anybody?
Hi, Marco. I have a
Hello.
question. I don't have a pitch deck or anything. We're still not looking for fundraising. Why did you say the exit strategies it should be at about 10%?
Yeah, well, that was an example. So, for example, you have formulated a valuation for your company. In the case I've showed you, they have formulated a valuation, a pre-money valuation that was 10 million euro. Now, a 10 million euro valuation, if you are asking to investors a 1 million, that means 10% return of investment.
Okay, I see that.
That's what it is. That's the exit strategy. So it varies very much depending on how much your valuation is. I think typically if you're raising your first round, it's a common practice to have between 10 to 20%, offering between 10 to 20% return of investment within, let's say, 3 to 5 years. That's what investors are really after.
I know, because I was reading, I've been doing a lot of literature concerning investments, and they were saying, because like especially for startups, they have a high probability of not working, and so it's quite a risky investment for an investor to put money into a startup. And actually I read like 80% of the startups don't have a future, so they're seeking for basically 6 times as much as the money they put in as the first investment within the next 5 years, more or less.
Yeah. Well, I mean, there are many strategies. Always you start very low and humble when you raise a seed round, and then of course you show or you tell investors that you are going to raise a late seed or Series A or Series B later in the future, where the amounts become larger, where your market growth goes also geographically a bit larger. So many of these things should not really be part of a deck, because they're up for negotiation. I like to put that sentence with the 10%, which you have pointed out, because I like to go to the negotiation table with a very strong standpoint. So to start with a baseline, which is ambitious, and it also provides a way to start the negotiation to investors. You will see that many investors have their own criteria to formulate valuation and exit strategy. So if you want their money, there's nothing you can do than just listen to them and start a negotiation from what they say, which often happens, you know. So I think all in all, you can feel free to even remove that sentence on the exit strategy. I think many of the customers I'm supporting, they don't feel comfortable, in fact, to have that sentence, and they just leave it to the discussions with the investors.
Yeah,
That's
like
fine.
for me, like I don't have a lot of experience within venture capital or investment. So I'm sitting there, I had already like a meeting with an investor, and I'm sitting and he's asking loads of questions, and well, I prepared for it and got everything, the numbers I could ready, but I do assumptions, because if I knew everything, I mean, on how much we will grow and everything, it wouldn't be as easy actually.
Of course.
And then that's why I wanted, my next question was, you were talking about the in this slide when you were talking about the competitive advantage, you said you can find a lot of information on Deal Room, Pitch Book. I've never heard of them. What is that?
Well, those are digital platforms where everybody could list their startup and the amount of revenue they have, and it's a tool to outreach to investors. So a lot of investors are looking at these portals in order to spot some opportunities. So it might be a good idea for you to open a profile. Have you heard about Crunchbase? Maybe that's more,
No.
not even that. Okay, Crunchbase is the most popular one, or Gust.com. Basically, you fill out a profile, you add your startup there, your number of employees, the money you have raised in the past, and you just wait that investors come to you, because in many ways, that's the smartest move you could do, rather than approaching investors, let them come to you. But they don't come to you if you don't have any traction. So it's a bit of a chicken and egg here. So you need the money for investors to achieve traction, but if you have little traction, you cannot get to them. So it is often a problem. But I would recommend filling out those profiles and play around in those portals. It will increase your visibility as well.
Yes, but actually what I was thinking of when you, in that slide, the competitive advantage, you put there information about the competitors, which is very hard to find, like even to define how large the market is, and really bringing all the information down to a number. And I thought those tools were more to kind of learn more about the competitors and the whole market, rather than for the pitch deck. Well, for the platform.
Your somehow problem is very common among other startups. So how to do a very good competitors analysis or market analysis. It is an exercise that takes time, but I would advise you to do, because you will discover maybe features you didn't know your product has that others don't. You will discover some other competitors in other parts of the world you wouldn't know. And this could be your friends, your enemies, your partners, people that buy you out. And it basically, having all those features together and comparing them with others help you to formulate your value proposition, your unique selling point.
Yes.
So it is something that you really need to do for yourself. Now, the market estimate, it is more for investors, I need to admit, for them to see the opportunity. But let me ask if anybody else has questions, so we give others the chance to speak. Anybody, any question, or want to present their company very quickly? We have 13 minutes.
I would have a question, Marco.
Yes, go ahead.
I think it's more a political question, if I may, or just, peeking into your experience, because we discussed this morning that women often do not dare to pitch. They think they will not get it anyway, so they don't. And I wanted to ask you for your experience there, how women perhaps also pitch differently. And what is your experience with female investors? What are they looking for? Or, is there a difference from your experience and from your perspective?
Yeah, I'm not a great expert on gender or gender equality, but I have to say that it is really sad when you see this team picture, and there's no women there. And I always say that what if you are pitching in front of an investor who's a woman, or who has that criteria as being something to choose you rather than others? And I'm working with a lot of engineering companies and engineering mindset type of companies where there's unfortunately very male dominated. But in the latest years, I have to say that also the technologies have evolved, and also the participation of women has increased. So we are talking about not the hardware engineering, like producing a turbine or those kind of things, but we're talking more about AI, SaaS, IoT, clean tech, med tech, and those things, the deep tech sector. And I see the participation of women in the team that it's going stronger. And I think from an investor's point of view, yes, just to reiterate, if there is a woman in an investment team, then you know, when I put one of those suggestions, know your audience, this is exactly what I meant.
So it means also to pitch differently if you know there's only men in the investors round.
Well, I mean, I don't know if it means differently, but you need to show that you involve some women. I mean, the worst is a typical hardcore engineering company that has 20 middle-aged men on the picture, maybe bald and overweight, and that happens all the time. It happens all the time. But things are changing. Things are changing slowly but steadily.
Yeah.
Thanks for the good question. It's a question that suits very much this this context that we are in. So thank you for that. Anyone else? We have 10 minutes. Anyone else? Or maybe Helen, if you have any more questions, I don't know.
I found it just super helpful to see such a slide deck in its entirety. And my first inclination was, wow, you know, this is very, very linear growth, you know, looking for linear growth, looking for hard facts, looking for names, titles, you know. But I also saw when you presented the team, for example, looking for diversity here, as you just said. Yeah. I just had this inclination because we discussed it this morning, you know, that there's also a world that is perpetuating itself when, you know, investors are mostly male and they're looking for other startups that are similar to their, you know, mindset and their world. And women also tend to found other businesses with other values or other goals that are perhaps not as, you know, do not have the same criteria. And I'm not experiencing that. I'm just asking, and that's just a reflection. You know, if a pitch deck could also look differently in the future, when more women investors are there and when more women founders pitch?
Well, what I can tell you is when I can tell you from a point of view of investors, I put myself in their shoes because I'm also investing with my company. And we look at the team slide, we want to see a committed team. And what are the criteria to show that the team is committed? You will be surprised to know how old-fashioned the investment industry is, what criteria they use to understand if a team is committed or not. For example, one criteria is whether the team members are employees or freelancers or contractors. If they are contractors and subcontractors and freelancers, that's a red flag. It's much better to be employees in the eyes of investors, you know, in 2021, believe it or not. The second theme is, again, believe it or not, if everyone is sitting in the same building. If you have a team which is a little bit in India, a little bit in Finland, a little bit in Germany, a little bit in the UK, this is already confusing the mind of many investors. Yet we are in 2021. Can you believe it? So, and also the point I had about the cap table was quite important, I think. Don't show that this is a one-man show. Even if you have 4 team members, you should not have a large percentage of ownership. And then also many times on the pictures, you know, you see a lot of staff members, they have the team with the logo. Some other staff member don't have the picture with the t-shirt and the logo. Everybody should be in synchrony. I think that is really, really important, even more than showing all men or all women. Make a mix things up. That's the secret sauce I would advise.
Thank you, Marco.
Good. Anyone else? Any burning questions? Please ask questions, otherwise you're gonna suffer my 2-minute video that I wanted to show you before. So please ask any question. Anybody? Well, it seems like I might have to show you a little video now, which is, let's see if I can do this by going to YouTube. I really hope you can hear the volume. This is a 2-minute clip of a founder of a company called Dollar Shave Club, which I think it's a masterful example of a story and how one should sell his product. It has been viewed almost 28 million times on YouTube. And my contention is really that pitching investors is really about storytelling and about selling. Okay, so let's go ahead and watch it. And by the way, if any of you have studied marketing or attended some marketing classes, chances are you may have seen this clip already because it's often showed there. So let's hope it works. Tell me if you hear the sound. No sound.
No sound.
No sound. Okay, then we try again. Maybe without these.
Marco, are you sharing the sound from? You have the specific option to share sound when you share your screen. Check that box is ticked.
How about now?
Hi, I'm Mike, founder of DollarShaveClub.com. What is DollarShaveClub.com? Well, for $1 a month, we send high-quality razors right to your door. Yeah, $1. Are the blades any good? No. Our blades are f***ing great. Each razor has stainless steel blades, an aloe vera lubricating strip, and a pivot head. It's so gentle a toddler could use it. And do you like spending $20 a month on brand name razors? 19 go to Roger Federer. I'm good at tennis. And do you think your razor needs a vibrating handle, a flashlight, a back scratcher, and 10 blades? Your handsome-ass grandfather had 1 blade and polio. Looking good, pop up! Stop paying for shave tech you don't need. And stop forgetting to buy your blades every month. Alejandro and I are going to ship them right to you. We're not just selling razors, we're also making new jobs. Alejandro, what were you doing last month?
Not working.
What are you doing now?
Working.
I'm no Vanderbilt, but this train makes hay. So stop forgetting to buy your blades every month and start deciding where you're going to stack all those dollar bills I'm saving you. We are DollarShaveClub.com, and the party is on.
I know karate, I know jiu-jitsu, I drive like a gangster when I'm coming to see you, see you, see you.
All right. I think our time is up. Our time is up. So again, many thanks to all of you who attended this session, and I wish you a good continuation of the summit. So goodbye, everybody. Thank you.